Taking out a new mortgage in 2025 and wondering if you should go fixed or variable, that is a topic on a lot of people's mind, given the world we live in right now and how volatile things are. Let me shed a little light on this topic for you and give you my opinion. Right now, the Trump administration is making changes to their economic policies that are going to benefit them long term. That is going to make our number one trading partner stronger. They're going to need more of our natural resources, which is going to help Canada long term. Okay, so let's put that aside. On top of that, there's now an initiative underway in Canada, and hopefully it'll come to fruition, that Canada is going to deregulate. We're going to hopefully get rid of some unnecessary red tape and reduce trade barriers from province to province, which will hopefully make our economy be able to chug faster and be stronger. Okay, two good things for both of our economies. Both of these things long term will be inflationary because the economies will heat up and they will be stronger. Higher inflation means higher interest rates. Okay, so let's set that aside for now. Near term, these tariffs that we are facing they will see a bump in prices, which will be inflationary short term. Okay, so we could see a shock to the system, which means more inflation short term. But long term, if this trade war continues and there's no agreement in place, which I doubt will happen, I think that sane minds will come to the table and reach an agreement, because it doesn't benefit either party to have a trade war continue for a long time. But if they were to continue for a long time, they would be deflationary because our economies would be devastated in North America. So you have deflationary forces long term. So there's opposing winds if this continues long term. But I don't think it will continue long term, because it's not in either party's best interest. So what that means is we have, short-term volatility, chaos in the markets, chaos in the news, like we're seeing, a bump in prices initially, and then they come to an agreement, which leaves Canada and the U.S. in a stronger position because of the things we talked about earlier: deregulation, less red tape, stronger North American economy. So long-term, I think there will be inflationary forces because of hopefully stronger economies in North America. On top of all that, the Bank of Canada is likely to aggressively cut interest rates near term to offset the negative effects of these tariffs. So that will also be stimulating to the Canadian economy, especially the housing market, which is badly needed because the housing market is in dire straits right now. So what I'm getting at with regards to fixed versus variable is, I believe that, as we go into the later months of 2025, even the summer, if you see a fixed rates in the 3.5%, I would go fixed. We live in very uncertain times. And if you can lock in for 5 years at 3.5% or even the high threes, take it, forget about it, and move on, because who knows what's coming down the road with these crazy geopolitical headlines that come out every single day, especially with the wars and conflicts. I think, if you can lock in for 5 years in the 3% range, take it. If you really like to gamble and roll the dice, going variable right now makes sense because rates are expected to move lower as in the months ahead. But like I said earlier, if the US and Canada comes to an agreement and it leaves both of our countries in a stronger position economically speaking, and the Bank of Canada has already cut rates aggressively, inflationary forces will prevail eventually. One last thing I'd like to say. If the federal government in Canada comes out with CERB 2.0 to help businesses that are in trouble because of the tariffs, and it is substantial, that also will be inflationary. So that's something really important that you got to keep an eye out for, okay? So maybe the Bank of Canada doesn't cut that aggressive, maybe only 1% this year, but then the federal government comes out with a stimulus measure, call it CERB 2.0, that could be inflationary. So that's something to keep in mind as well when you're thinking about going fixed versus variable. All in all, if you don't like uncertainty, if you can lock in the 3% range for 5 years, I would take it. Take care, everyone. Bye.